All right. Hey, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. And I am joined by the one and only Willy Woo with his on-chain analytics. So this is going to be a great show. Willy, I think this is the first time you're joining me this year. So thank you very much, man.
Wow, has it been that long?
I think so. I know
Yeah.
time absolutely flies. You got a lot going on in your life. You're in Hong Kong. I don't know what's it like over there. I am in Dubai, as you guys can tell by my background. Dubai is, I don't like the mask quarantines, but I'll take the mask quarantine, like the mask mandates. Sorry, like you have to wear a mask everywhere. Like if you walk outside your building, you're supposed to wear a mask, or they can actually like give you a fine. But every business is open, so you can still go out, you can still have fun. And I would rather take, a mask mandate with every business open than like our friends in the Netherlands that have a curfew at 9 p.m.
Yeah, it's over here it's kind of similar. Everyone wears mask. It's, if you caught without a mask, I don't know what the fine is. It's a pretty heavy fine. All the businesses are open. A lot of people taking precautions. We had lockdown, which means that there was a curfew at 6 p.m. So restaurants closed, bars closed. That lifted just recently. It's sort of on and off depending on, the numbers week to week. But the main thing here in Hong Kong is we've got now it's a 3 week quarantine. So come into the country, or if you leave the country, come back, you've got 3 weeks of quarantine, and it's in a mandated hotel. So it means traveling's out of the question if you want to come back anytime soon.
Yeah,
So
man, that sucks because we are moving the financial summit hopefully to Zanzibar because they have no mandates whatsoever on masks or businesses or life. But we got to get you there, Willie. Hopefully, Hong Kong would release their quarantine mandates, and then we can get Willie over there. All right. Without further ado, it is time to jump into screen share. I'm going to let Willie properly introduce himself. So let me go off to screen share. So here's the format, guys. I'm going to let Willie introduce himself as I pull up his uh, Twitter and his website. Then I'm going to spend 5 to 7 minutes going through what I think of the price of Bitcoin. And then Willie will talk for about an hour, hopefully. And then I'll go back to my charts for about 5 to 10 minutes to give you guys just the same thing that I said in the beginning of the show. So, Willie, uh, go ahead, give a brief intro. I do have some new subscribers. We broke 100,000 subs this week, thanks to Carl the Moon. So give us a little bit of your background.
okay, so you can find my Twitter account on Woonomic, which you can see there. So it's I publish a lot of on-chain research, which is basically reading the Bitcoin blockchain for investment signals, pretty much demand and supply. It's kind of a thing that happened, probably 2016, 17. We new kind of field, and now it's kind of exploded into this new thing that us crypto people have over like your traditional markets like Wall Street. So yeah, you just follow me there. I publish most of my research there. I also run a newsletter which is called the Bitcoin Forecast, which looks at the blockchain and checks out, demand, supply, and the kind of bounds of which price might move in the next few weeks and the likely direction. So yeah, that's pretty popular amongst people. I launched this one really just to help new people coming into Bitcoin kind of get a sense of the market and not get shaken out, because this is a pretty extreme ride when you're riding bull markets, Bitcoin bull markets. So yeah, so if you feel like you need either if you're a trader and you want some sort of bias based on the longer range directionality or where we are in the macro cycle, this newsletter helps. And also if you're a hodler, best times to stack. And later on I'm really interested to see how we approach the top, and want to publish a bit of data around that as we get closer. No idea exactly when that'll be just yet, because it's kind of a phenomenal bull market right now. But yeah, just wait and see if you're on that leader.
Yep, and I do recommend your newsletter to pretty much anyone that is not an active trader but wants to have a general idea of where Bitcoin is going. Also, people that kind of want to get the big picture of Bitcoin. Someone that's more of a position trader. You want to kind of get out once every few years, get in once every few years, or maybe dollar cost average in a more strategic way. So Willy Woo's newsletter is great for that. And you can also check out all of his charts at charts.woobull.com. All these links are in the video description. All right. I'm supposed to make this announcement every time, guys. I do not solicit investment for anything. If I'm tempted to turn off YouTube comments, because to every comment there is a fake tone Vays giving away his WhatsApp number, because YouTube doesn't want to do anything about scams. They don't really care if people get scammed. I will never reach out to you asking for your money. That will never, ever, ever happen. So please do not get scammed by fake tone Vases. Okay, real quick, I'm just gonna glance at the charts real quick. The weekly chart is about to come to an end, and that is a pretty disastrous candle on a weekly scale. However, the counts on the MRI are still bullish. As long as these counts are all green and bullish, it is just a pullback, nothing to really be that concerned about as far as a deeper correction. The daily chart is becoming very, very interesting. I have been looking for a move down to the low $40,000 range. I would consider somewhere between 40,000 and 41,500 the perfect buying opportunity. It would be even more perfect if it occurred 3 days from today, because that would be on an MRI buy. It would satisfy so many requirements. It would bounce off a moving average. It would be on an MRI buy, and it would be a very healthy 30% correction. So many things reset if Bitcoin actually makes it to 41,000 or a smidge below. On a short-term time frame, I am pretty damn bearish. Let's go to the 4-hour chart first. We had a brand new 4-hour low and a brand new 4-hour close. We continue to be rejected by the moving averages that have crossed over through a def cross. You are being supported by the 200 period moving average on a 4-hour, but you're about to have another def cross. This to me is a very bearish situation. On a more closer look on the 1 hour, all I have to do is draw a best fit horizontal line right here, basically through these lows and this low. And we did break the support line. We did bounce off of it, didn't lead too much. We fell. We just back tested this 2 hours ago, and this is a recipe for a move down to the low $40,000 range. That's what I am looking at right now. And on that note, I'm gonna, I'm sorry, one more thing. I do want to keep an eye on the def watch of B-Trash. It almost fell below 1%. All I needed to do is close below 1%, and I will never look at this shitcoin ever again. That's the only thing we're still waiting for. Okay, on this note, I'm gonna stop my screen share, and I'm gonna hand it off to Willy.
Okay, let me see if I can figure out. Oh, you've disabled screen share.
Oh, wait, let me turn it on for you. And I'd like to thank the 1,700 live viewers we have on right now. Let me give Willy permission to the screen share. And just after every chart, Willy, just pause for questions, mostly mine, but I am keeping an eye on the live chat.
Oh, here we go. Which one can I do? I think it's that one. That one. Yeah, I think that's the one.
Try not to dox anything, so.
Yeah, I'm just sharing a Firefox window.
Application. Excellent. You may want to make it a little bit wider. Wider still.
Yeah, I'm trying to, maybe I should put my other laptop up. I want the comments up as well. So, is that okay? I can probably just collapse that a little.
If you can make it wider, it would be better. Yep, that's better.
All right, here we go. So, where we go? I thought I'd just cover, let's jump to Glassnode. Glassnode. So Glassnode is a pretty good tool. Looks at a whole bunch of on-chain data. Also looks at some of the derivatives action. And so I'll just cover what happened, what I think happened. Actually, I jumped to the news there. That covers it really nicely. Here we go. So here we go. We had, if you guys remember, this is the yellow was price, and we came down to a double bottom, and then Elon Musk tweeted about Bitcoin in his profile, and we pumped. We had Ruffer, a hedge fund, who bought Bitcoin, and it grew to $1.3 billion, and they sold half their position, and it looks like they sold down on that pump with $650 million of Bitcoin sold off. So they sold half their position there. And then we had this crazy sort of move upwards, as in it was just very consistent, and there was no waves involved. And so I think this was in that zone where Tesla was accumulating. We saw the SEC I think they announced, or there was an announcement that Tesla had bought 1.5 billion through the SEC sort of filings, and then we had this price jump, and we crossed the all-time high. We crossed the all-time high very quickly, and you can see it in this zone. This is the blue line is the funding rate, in which what it costs for derivative traders to hold on to their long positions, and you see it jumped upwards, which
is that Willy, sorry, is that cumulative, or did you pick one exchange?
No, that's all of them. That's all of them. This is a Glassnode. I'll show you the real chart.
It's cumulative. Got
it. It's volume weighted. So you can see the where is it? Green chart. Oh, wrong one. This one here. This was the pump here, and we shot up there, and so essentially what happened was there was a whole lot of speculative action that went up, like it just brought up the price, and we went higher and higher and higher, and it was quite overheated. And then I actually thought it would go higher, but we had this massive sell down, and what happened was that, oh no, here's another view of that. The red line here is one of the models I have for maximum pullback on the market. It's based on like a fundamental floor price that I have, and how high we were trading above it. And if you think about the floor price, it's like the minimum price that that long-term investors will, that's this price that long-term investors will support. Therefore, it forms this kind of floor minimum price, and how high we float above that is essentially what this red line is. And you can see right here the pullback. I'm calling it the overheatometer. Just jumped right there, and we went up and up and up and up, and then we had this drop in price, and it coincided with this spike here, and we had this. Let's see where I find it. See that spike here? This chart here is essentially the net volume of Bitcoins going in and out of all the exchanges, and so like most of the time we're just hovering around zero. Often a lot of downward movement here as people are buying and scooping it off the exchanges. And we had this spike here, which was 28,000 Bitcoins that was sent into Gemini exchange. And I spoke to Glassnode about this right while that was happening. And they confirmed that that was a wallet labeling error. upstream of their data provider was showing this flow going into Gemini, and actually was a cold storage movement within Gemini Exchange. But that information was, you know, spread amongst traders, and immediately you can see the price started to react. This is it's, you know, it's coincidental. I'm thinking this is the reason. I remember waking up and seeing like, whoa, what was that? And I saw a lot of people tweeting about this and sharing this information on Telegram. I actually sold down on that as well until, you know, and contacted Glassnode, and then we started to see liquidations. Essentially, this whole downward run was, as we started to fall down, you can see the long positions wound out, and there's a liquidation chart somewhere which I haven't got up right now, which showed that in this zone we had a lot of liquidations. But essentially, that buying momentum got halted, and interestingly, it was most likely from bad data. So we're in this sort of downward run now, and I'll just flick over to some fundamentals on the exchanges. Well, maybe I'll pause here if you want to talk into that.
Yeah.
No?
So it sounds like the selling was kicked off based on misunderstanding of the 28,000 Bitcoin transaction. But once the selling began, it kind of liquidated some people, and it kind of took on the life of its own. So it's one of those things where a misunderstanding of a news event caused you know, alterations in how the market might have perceived it if the FUD didn't actually happen because it was unnecessary.
Yeah, correct. I mean, this was Glassnode data. Also, CryptoQuant also was showing the same data. I think we're both having the same upstream data provider in that regard. I think CryptoQuant, they tweeted that out. What was it, 5 days ago? And I think that might have got some pretty urgent sell orders on people reading that. They have an alert service as well that goes out to traders. So yeah, that led us into this downward momentum. Lots of liquidations, sell down. Remember, this whole area of inflated price is from derivative traders buying, not actually spot buying, and this shows that there's a lot of high, you know, short-term speculation going on here, pushing us quite high up in the overheater meter. That was 33.
Let me ask you another question. I know you have more charts to do, but how much do you put into F2 pool? So everyone is talking about F2 pool. Now, F2 pool is a pool, and everyone is talking about how much Bitcoin F2 pool is selling. And I'm a little bit confused on that concept because, I mean, F2 pool could have been collecting their fee for running the pool for the last 5 years and finally decided to sell their giant hodl. Other than that, they just give out that Bitcoin to the miners inside F2 pool. So do you have any commentary on everyone freaking out over F2 pool apparently selling hundreds of billions of Bitcoin?
Yeah, I don't even, like, I'm not even seeing it in this data. I think a lot of that comes from CryptoQuant, and I don't know how they're getting their data. But look, this is transfer of volume from miners to exchanges. Let's go to 1 day. Okay, so this is, remember, like 900 Bitcoins a mine per day. Okay, I'm going to run a moving average, so this is a little bit smoother. So we've got like, what is it, 800 Bitcoins per day at peak. You know, this is like the coins moving from all of the miners going to the exchanges, and like it's not a lot. Look at that. That's like let's run seven. That's a peak there. That's 700 Bitcoins. So if I go 700 Bitcoins times, like, let's call it up around that region, $50,000, we're talking about $35 million of sell-off coming from the miners. And You know, I'm reading around $2 billion of capital is coming into the network per day during this bull season. So it's not a big, for me, like I think this whole miner stuff is just overinflated. The way I look at it is that once the bull market, the main bull market, you know, the full mid-flight bull market we're in now is underway, you're talking billions per day coming into the network. And so, look, if you've got that amount of capital, 35 million is just a joke. What happens is when you're in a bear market or a sideways market, or you know, when we're accumulating, when it's the early stage of bull market where the price buying, you know, the buying power is very, very fragile, the miners have a lot of influence. But once that halvening's kicked in and you've given a bit of time for that buying momentum to start up, it's just tiny what the miners sell pressure is compared to the rapid buying that we've got coming in from this cycle, the institutions and high net worth guys, and you know, and now we've got the retail guys coming in as well. So anyway, I'd like to put to death that that fear. So moving on.
All right, let's move on to the next chart.
Okay, so we know that this is a I think it's a 4-day moving average of the flows on exchanges. You want to just ignore this bump here. This positive bump here is that 28,000 Bitcoins that flowed in, that's been averaged out over those 4 days. So actually over this entire phase, we had very strong buying, a lot of high net worth and institutional buying coming in, scooping it off, moving to cold storage. I say that because the new retail tend to buy and keep their coins on exchanges. So either the whales or institutions that buy and move to cold storage. And that's what we're picking up here. It's very strong buying, as in when we're negative below this line, that means that the net flow of Bitcoins are coming out of exchanges. And you can see like we're in the zone here, last seen in this run up here, is the black line underneath. You can see the price moving up. That power.
What's the I'm sorry, Willie, what's the date on that? If you scroll down a little bit. I can't see
January. That's kind of New Year's pump, hey.
Perfect.
This is like, yeah, that's the yeah. So yeah, it's very, very healthy. See the blue line here? This is the USDC that's being created and sent into the exchanges to buy Bitcoin. Maybe Ethereum, you could argue as well. It hasn't skipped a beat. It's just untold buying pressure.
Hey,
so
I'm sorry. Remind me. USDC. Who is that? Coinbase's stable coin?
Yeah, it's Circle, but Coinbase.
Circle.
Yeah,
okay, Circle. That's what it is. Circle.
Circle
Yeah. I forget who controls it. It doesn't really matter whether it's USDC or USDT or I was just.
Yeah, it does. So USDC is US based. The US regulated institutions will buy USDC. They will not buy Tether, because that's an offshore kind of thing, mainly in Asia. If you want to be US regulated, you buy USDC. So this is a really good proxy to mainly institutional buyers that are minting these USDC, converting their cash into USDC, sending it into Coinbase, and buying. So it hasn't skipped a beat. It's strong as. So the underlying buying pressure has not skipped a beat. It's just continued. See, these are both 3 months. So this price line is very, very much in tune. So we had a bit of a dip here in this zone here, but more or less we're very, very strong. And I don't know how Tesla bought their stuff, their Bitcoin, but we had a bit of a spike in this zone here, exactly where I thought maybe Tesla bought. This was the Elon pump there. So yeah, so underlying it, we've got very strong buying pressure, whilst we've got very strong selling from speculators that are selling off of their derivatives and margin positions. So that's a view I have, and you can jump in there, or I can continue. Maybe I'll continue a little. So this is the view of the miners selling. So the miners have stopped selling, okay? And I've always said it doesn't really make much difference. I love to see this. It's like last time the miners stopped selling, that they pretty much sold the bottom, right? So they sold the top there, but they're depleted now. This chart here, the red chart is the red, like both of these charts are looking at either deposits or withdrawals going into exchanges. The red one here is the withdrawals, and it's the average withdrawal size coming out of the exchanges. The green is the average deposit size going into exchanges. And you can see we had sell-offs here with large peaks. So larger positions, like more whale type people were selling on each of these down runs. And so far, I'm seeing very, very little large volume selling right now. So I think, well, definitely this last wave down is quite different from the other two we saw. It's also a weekend, we've got to bear that in mind. Maybe on Monday we think fires up again and we had large deposits, but that could be the case, and we have another leg down. But like so far, this last wave down looks a little bit different from the others, and I'm getting a sense that we're approaching a bottom here. Even in the zone, we've got like this whole volume profile band. I'll just go to the technical charts here. So this is price discovery, how much volume is traded at each price point. We're inside this band here, and it's still within that, you know, like strong support where we've had a bit of price discovery. There's a gap in here we might suck down into, which is pretty much your bottom, around 41,000. I think that's pretty valid. Where I've got a dotted line, it's 38.8, which is exactly on my modeling of the lowest extreme we can go to on a daily close. That model is held for 12 years of Bitcoin's bull market. So yeah, I mean, if it comes anywhere close to that, I'll be buying and buying and buying. So I don't know whether we're going to go down any further. I'm not a short-term oracle. I just look at long-term demand and supply. I think we're pretty close. We're probably 1 to 2, maybe 3 days away from a full reset before this thing launches up again. That's just my sense from some of the models I'm looking at. I'll throw this chart up, which is the equivalent of that volume profile. It's actually a much more precise view of it, because it's looking at the wallets, and it's looking at the price at which people bought in based on the time those coins moved into their wallets. And this is the cluster we're in now. It's the same as that volume profile we saw before, where this is stacked vertically and we've got a gap inside here, and then there's strong buying. This is doing the same thing for hodlers, which is what I consider long-term investors, which has precedence over just what we see on exchanges. And so I think this whole zone here is going to be quite strong. If we break it, we might get a wick down into this $39,000 range, which should be an absolute steal. I think this zone here will support it. Yeah, that's about it. I'll pause here. I can talk about, there's a few more charts.
I definitely have questions. So there's 2 questions that keep coming up. Let's handle one of them. Since you're on Glassnode, can you take a look at the net unrealized profit and loss index, NUPL? Are you familiar with it? Maybe you can explain what it is, and do you utilize it?
I don't use it much. I have to read it every time I look at it. Maybe that guy can explain it. Net unrealized profit and loss that discards transactions between address. So yeah, it seems to be adjusted. Provides an improved market signals. And yeah, I wish they didn't improve that what the heck that is. No, I'm not going to talk to this because like I don't use this chart much.
Okay, no, that's fair. Another one that is coming up, and I think the answer to this is probably simpler. I mean, I'll give a simple answer. Maybe Willie can give a more detailed answer. The question comes basically in two forms. If everyone just holds Bitcoin and doesn't sell, so liquidity is low, why is Bitcoin becoming less volatile? And a similar question, since too much of Bitcoin is moved to cold storage, like off exchange, don't you think that this will lead to a lack of liquidity at the exchanges and price will be easily manipulated by whales if they want to? So my quick answer to that is you can't just look at how many Bitcoins are coming off exchanges. You want to look at, you want to factor in how much Bitcoin has gone up in price. So if, for example, there is X amount of Bitcoin on the exchange and 50% of that Bitcoin has come off the exchange, but the price of Bitcoin has gone up by more than 100%, that means there's actually more liquidity in US dollar terms on the exchange, even though there's half the Bitcoin. So just because Bitcoin is coming off exchanges, it has to be in relative terms with how much market cap is on the exchanges. But maybe Willie has a more detailed answer.
Okay, so liquidity is this bandy around term that everyone likes to use, and it means many, many different things in different contexts. And so, you know, if you're a trader, liquidity is how much money can I move? Can I buy or sell $1 billion or $2 billion worth of this asset? And how much will the price move in accordance to it? So essentially, it's the steepness of the order books. Is the order books showing that it would take a $1 billion sell right now, and how far would the price go? And so that kind of liquidity is defined by essentially how many bids and asks are on the order book. All exchanges have liquidity providers who temporarily build those walls up so that someone, if they want to dump quick, they can have that access. There's another definition of liquidity. You could think of that as more the amount of volume. So if there's a shite ton of volume moving, you can put like limit orders in and wait for the market to come to you. That's another way of looking at liquidity. So Bitcoin has insane liquidity in that sense. If you want to buy or sell this asset, and essentially volume monitor FTX. I think I like their monitor the most. It has insane amounts of volume. Like, look at this. This is like we're trading $133 billion per day in volume, but across derivatives and spot. And so, what was that? 52 billion total in spot volume. So it's just ridiculous the amount of liquidity we've got. It actually shits all over gold for the same size as Bitcoin. So don't worry about buying or selling, getting access to Bitcoin or the price moving lots, because the order books are thin, because they're really deep. You know, Tesla's not going to put $1.5 billion over a few days into Bitcoin and moon the price to $5 million like if it was, say, Dogecoin. So that kind of liquidity is very deep in Bitcoin. It's becoming, I think it's fast tracking to be one of the most liquid markets in the world. Then we have this other thing that people were mixing up with, because Glassnode put this out a while back. And it was, I actually asked, I think I was asked them if they could do something like this, and they did. They managed to look at all the wallets. They looked at all the wallets on the network, and then they cluster those wallets, and they go, right, each wallet cluster is a different entity, it's a different participant. We can see that from the transactional interaction. And then what we want to look at is the interaction of those wallets and see their history. and we want to classify them into 3 different types. We're going to classify them to illiquid, which is a generic term, but all that means is these are hodlers. They buy and they buy, and very few of their movements signify a selling. So these are buy, hold, accumulate guys, and I've called them illiquid, which is the confusion here. Then we've got this orange, which is liquid. These are the people that you see a lot of coins moving in, and you see quite a few moving out of their wallets. And then you've got highly liquid, which is the red zone. And this is people who move coins in and out, in and out. So you're probably, they're much more, pretty much trading a lot more of their coins. So that's what we're talking about in terms of, you could think of this as more like the amount of the supply that's being locked up. And so there's a lot of coins being locked up, and that's creating a supply shock, and it does mean the price starts to move upwards. But when you know it moves upwards, it's still very liquid in terms of, if you're trading $1 billion, it's still relatively liquid for you. It just means that the price is going to, I would say, like, if you're into altcoins, most altcoins are trying to design what you're seeing in Bitcoin, where a lot of people are strong hodlers and they're holding on really strongly to their coins. What the altcoin networks are doing is they're inventing staking, which is like, I'm going to lock it up in this mechanism, and I'm going to pay you money, usually money that's printed into the supply to incentivize you to hold and lock up those coins, such that the price can experience a supply shock and move upwards. Hope that explains it. Yeah, like there will be a supply shock, but it's not like anything you see within, like, name some pump and dump coins, like Litecoin, Dogecoin, a whole bunch of them that just go mooning over a very short amount of days. You don't see that in Bitcoin because there is very strong short-term liquidity in the billions of dollars. So anyway, let's go back to probably the last bit of this, which is I thought I'd do. Yeah, actually, I want to just touch on this. See this? Well, we just talked about this liquidity. If you see this chart, where was that chart? So many charts. Liquid supply. Here we go. And you see, you'll see that as of this COVID crash, all people started to hold on to their coins. So all the coins that were up for sale, which is represented by orange and red, they're essentially held by people who have a history of selling their coins. It's moving down and down and down because they're ceding their coins to the strong hodlers, which is the blue guys here. This coincides with the net flow out of exchanges, which I can also
Yeah, that's
show.
that's really interesting how the COVID crash completely changed fundamentally the view of hodlers versus traders. I don't think we've ever seen that before in the history of Bitcoin.
Yeah, this is a what actually I think it is that like, this is when the corporate treasury buyers started to come in. MicroStrategy bought right there, and that led the corporate buying of Bitcoin, which then led the hedge fund world and high net worth people to come in to buy and hold. But I do think in here there was a mix of maybe the corporate directors that bought personally, and also some very smart individuals that looked at Bitcoin as the right asset to shelter from the inflation that's come. So all that to say is that we can go back to this chart here, and this is measuring the coins moving to the strong hodlers, versus moving to the weak hodlers. When it goes red, it's like net movement to the strong hodlers, and going to the green is that coins are moving back to the weak hodlers, which tend to trade. And you'll see that as we're selling down, you'll see that there's been a net increase over the last like 5 or 6 days since that peak, that those coins are being bought up, which I showed you earlier with those charts, that strong corporate buying right now. It's continuing to move to those strong hands. So it's very healthy. I have no fears that we're entering into a bear market. I keep getting messaged all the time by new people, or people scared because we've had such an exaggerated run in the last few months. But everything's business as normal, really. It's just more coins being scooped up by strong hands. And also I'd say, like, people think like, wow, it's gone to like 58,000 in no time, and now it's just far too expensive. Who's going to buy in this zone? And you know, if anyone was watching Michael Saylor's conference for corporates, the conversation there was, it's now reaching the price point where it's been de-risked, and they want to see the price go higher before it's a safe asset. And we did break $1 trillion, which means that it's now actually at least using the right unit for you know, an asset bucket. It's trillions. We want to be in the trillions to be considered a legit asset bucket, and we're kind of just flirting with that right now. So yeah, think of that as $50,000 to $100,000 is when Bitcoin becomes de-risked, and we've moved into that zone on very, very strong fundamentals. If you're a technical trader doing technical trades on week to week, you'll be freaking out for sure. Everything will be redlining. But if you're looking at these charts and knowing who's buying, it's just, you know, it's pretty well supported. I could even go to this blue line.
Yeah.
That shows you
after this, can you mind showing your chart that shows you what you see as the floor? That's a very good chart.
Okay, I'll do that. But first, this is another way of doing the floor. It's MVT price. MVT price is looking at essentially the volume moving between investors, and it's investment velocity. How much of the money supply is moving each day? The faster that moves, the more investment interest there is, because when coins are moving between different investors, that's investors coming in. You know, old investors selling in and new investors coming in. It's very healthy. So I'll zoom that out, and you'll see that it really does capture a lot of the you know, like as we're in a bear market, investment velocity dropped way down. Price was well overvalued over MVT velocity, and you'll see that it's really creating a floor here. And in this part of the bull, this is actually a bull market, even though people thought it was a bear market. And then we had, you know, a very, you know, the white swan event, which pierced it, recovered, and this was actually where I was using this model to say we're going to decouple from stocks. I think everyone's saying, oh, it's just a failed safe haven, and I said this, like, I could see this floor coming up and squeezing, and at this point stocks crashed and Bitcoin bounced, because the floor, supported by these fundamental investors buying and holding, supported that. And you can see this floor coming up and up and up at it. It bounced it even with that amount of air under it, and we're in that zone now. And if you want to see the floor, I'll just zoom into the newsletter and see that there. This is just a few days ago. The floor doesn't move much once we're in a correction. It moves up with the price as investments coming in, and then it stays flat as the price is coming down. That's the general behavior. So the floor price is 39,000, 38.8 as of today. It's gone sideways, and this thing's coming into it. We never touched it there, even though we did touch it on the hourly. This is a daily close model. So you can, you know, you might get a wick below it, but this model is not looking at those short time frames. Yeah. Do you want to?
Oh, hey, Willy, since you touched on it, do you not see much of a correlation between Bitcoin and the traditional stock market, S&P or NASDAQ? Because Bitcoin has been pulling back over the last, few weeks, and so, or last week, and so has the stock market as well. I still see correlation there, at least directionally, not
Yeah,
magnitude.
you'll see that correlation if you're trading these you know, hourly candles intraday. If you're trading maybe week to week, month to month, I think those correlations are weaker. And so I'm not looking at anything within a day or candle by candle within hours. But certainly that correlation is quite high in the shorter time frames. Yeah.
Yeah, I'm
So
slightly. I personally see a correlation on a larger time frames. I mean, Bitcoin made a new all-time high along with the stock market once again. I still think there's a big correlation there. The good news is, based on how much money America is printing and based on how they don't want anyone to run a business, expect the stock market to keep going up, because just like corporations are buying into Bitcoin as a safe haven, many corporations and other people are buying into the stock market as a safe haven, because your other option is government debt, and you have to be a complete idiot to buy into government debt. So everyone is buying up the stock market, and that's why it's rising.
yeah, I think that's valid too, because it's, you know, one of these stores of value and everyone's pouring money in, and I think that correlation will increase if this corporate treasury buying business starts to really take off. I mean, the S&P 500 will probably be represented in, you know, a certain percentage of it will be Bitcoin in their treasuries that's being valued into it. So I could see that a correlation from that as well. But yeah, like in this day and age, stocks, real estate, everything is just store of value right now as fiat's being printed to the hilt. So yeah, I'll just.
All right. Well, let's go over. If you want to go over to your website, which you haven't shown yet, and let's take a look at some of the old charts we used to look at, like the minor difficulty ribbon and some of the other stuff.
Yeah, okay. I'll just want to throw one last one because I think it's quite important, which is net entity growth. Okay, so I just want to show you this kind of crazy spike up here. You should ignore the latest bit of the spike. I think.
Wait, what is that yellow? What's the yellow line?
It's just a very
Entities
exciting.
net growth. Okay, what does that mean?
Okay, entities means ghosts. No, it means participants. So entities is you or a hedge fund or a corporate treasury. So we're counting clusters of wallets that look like a person or a corporate entity. And then we're seeing how many are coming into the network, because you say, well, there's a bunch of wallets here that belong to one person that just appeared. And then you're subtracting people who have left, sold out of the Bitcoin, disgusted, and never coming back, and their wallets are zero. And you take the difference, and that's the net entity growth. So this is the rate of on-chain wallet users coming onto the network. And so see this zone here. So we're pretty much in the, I'll read it out. It's like 12, roughly 7,500 to 12,500, mainly 7,500 new users coming onto Bitcoin per day as seen by the blockchain. Okay, and then we had this jump at this point to 25,000 users per day.
Wait, I'm sorry. What are I'm sorry, Willy. What are the units of the entities? Is this the number of entities, or is that the amount of value? Is it it's the number of entities? So it's regardless of how much Bitcoin they hold.
regardless. This is counting users, okay? I would rename this chart to net user growth of the network. Would that help?
Okay.
Net user growth. So how many
Is
users
this
are coming onto
is
Bitcoin
there
or losing?
is there a way to, like volume adjust this chart by the amount of value in these wallets? Because I
That's a
think
different
that would be
chart.
very interesting as well.
That's a different chart. Okay, that's like we're looking at now. Coins
Right,
moving,
right, right, right. But I'm just okay.
which is essentially what
I would love
MVT
to see
is
that
in
chart.
volume. So if you want to see volume, that's like MVT. We can also look at the value held by different size of wallets, that sort of thing. You might look at realized cap, which we can go into. But this chart is more like this chart. This is like fundamentally, I'm not interested in capital coming in. I'm interested in the rate in which users are adopting Bitcoin. So this chart here is essentially the adoption S curve of Bitcoin. This is the amount of users in the world using the internet, right? And as of January this year, we crossed the 1997 number, which was 120 million total users, right? So essentially, how many more new users coming is determining the steepness of this line, right? And so from that, we can go, oh, look, in 4 years, we're going to have 1 billion users. And beyond that, probably in the following 2 years, we'll be at 2
Willy, I'm
billion.
sorry. This chart is really misleading. You should like alter the color after Jan 2021 because I thought that the whole green thing is the current thing.
So this is the amount of users that, this is the estimated number of users that use Bitcoin, meaning they hodl Bitcoin.
Right, right.
And
No, but I mean, like, but at the point, like, it's the same solid line going into the future. You may want to alter the color or brightness of that line after Jan 2021 to avoid
well,
total
no, it's a
confusion.
certain thing, so I don't want to lighten it up. It's absolutely going to happen. Okay, so then, but
I'm like,
you know,
holy,
like,
I'm like, holy shit, we're almost where the internet is.
well, you got to look at the calendar. You know, look,
Yeah, yeah,
this is, and this does say the next 4 years. I mean, I'm zapping through this very quickly, but like, if I slow it down, this is 4 years in the future, 1 billion users. And then probably another 2 years after that, 2 billion users. And probably within the next, you can say from that, in the next 6 years, Bitcoin wins. Like it becomes a major, unstoppable, well, it's like what? When you hit something like 16% of the population in adoption, that's when you hit the mainstream, and the rest is just it's just rockets. So um, so we're looking more like that. We're not looking at the capital, right? Or in this case, I don't really care about this because what I'm going to say right now, all I wanted to say with this is, hello, retail has arrived. This is not all the corporations in the US coming in at 20,000 new users per day, or hedge funds or high net worth millionaires coming in. This is moms and pops and brothers and sisters and the taxi driver coming in, and they're buying in, which, retail came in the last cycle around here, around the, what is that? That's Octoberish, around Octoberish of 2016. And that changes the whole dynamic of the market, because now we've got three types of players. We've got institutions, which is, corporates and very large funds, and you've got high net worth individuals who came in also. But now we've got moms and pops taking small slugs at this, taking small bites of it, and they also treat their coins differently. They don't actually. Very few of them actually store on-chain wallets. They store more likely on Coinbase or the exchanges. So yeah, just saying that that's happened. So we're going to be aware of that. They're more likely to FOMO and FUD into this cycle. So they'll just change some of the ways price will behave moving forward in subtle ways. The end, I think that's it. Oh, this peak, by the way, is over exaggerated just on technicalities, but I won't go into it.
All right, let's go over to your website. Let's take a look at a couple of old charts that you used to show on this channel all the time.
Sure, there we go. Here we go. Which one would you like? Let's see. Let's go to MVT ratio, the golden oldie. This is like the first, I think this is one of the first signaling indicators we ever saw on Bitcoin. Again, I think someone in the chat room asked, what is NVT? Is network value to transaction ratio. So essentially, this is Bitcoin's price earnings ratio. In a company, you have share price, and then you do a ratio to how much money they're earning. We don't have earnings because it's not a company, but we do have investors. It's an investment network. So we look at how much velocity is moving between these investors, how much money supply is churning between investors. That's your earnings. And you look at the valuation, which is the market cap, and you do the ratio. And so when it's high, it's overvalued. When it's low, it's undervalued. And so we're in this still very strong zone here. We're in the lower bounds, close to the green line, which is a buy. This is a very slow moving indicator. It swings over the, each of these red lines is a macro cycle. Essentially, that's a halving cycle. So last 4 years. So yep, still very healthy. Still, my reckonings we're midway into the bull market right now. In the RV, so this one's showing a lot more heatedness. This is the ratio of the market cap to essentially. Okay, can you still hear me?
I hear you. It's not as good as before. You're cutting out a little bit.
Okay, my headset just flicked on and off, but I think I'll assume you can hear me. So yeah, that's where we're at. We're quite high on the overheat, but certainly if I do turn on the Z, which sort of evens out things between cycles, we're in this zone here. Market tops are up here. We're needing to move a little bit higher. We just pulled back down on this correction. So, a lot of people are thinking we might get a double top like we saw in 2013. Maybe that's the case. Because I don't think it's likely that we're going to stop until December. Yet to see. And certainly with the amount of money coming in and the type of money that's coming in, they're not making quick decisions. They're corporations. I think Michael Saylor said 6 to 9 months before they make, from the time they push the go button or look at it till the time that they have got all the approvals inside the company to make it work. So that puts us into the third or fourth quarter of this year before they start moving. So we're going to have a lot of bullish action from that if that is the case. And my thinking is we'll probably in that zone see the first announcements of sovereign wealth funds starting to deploy into Bitcoin as well. So if that happens, then Dan Howard's super cycle theory probably has a lot of weight, and we could push right through this 2022 start of the year, and maybe even go into a extended bull cycle from that kind of money.
All right, let's jump back over to your site. Let's look at the miner difficulty ribbon.
Yeah, that one. I'm not getting much signal from that.
There was a question earlier whether you have any data on miner revenue and whether you factored that into your analysis.
I do have the data. I'm just not interested in it right now. I just think people are just over trigger happy on the impact of miners. Yeah, I covered that earlier. So the sell pressure is so tiny. The reality is exchanges sell more Bitcoin than miners right now, to the point where it's almost a joke. Like miners are strong in bear markets, not in bull markets. When the buying pressure is weak, whoever's selling has dominance. Sellers market. Well, the buyers market in a bear market, meaning the sellers have the dominance. Any addition of that sell pressure is going to freak the market out. But right now, we shrug that off. We had compression here, right? So it's expanding here. It's actually bullish. I mean, if you were to look at this pullback, and if you're looking at price only, if you're a technical person, and maybe you're not even looking at fundamentals on derivative exchanges, you'd be freaking out. You'd be going, that's a pullback, that's a pullback. But if you're looking on chain from what long-term investors are doing, this is just crap. This is crap too. This pump here and up here is crap, and this pullback is crap. It's just speculator gains going up and going down. Fundamentally, investors are coming in, and miners are far from capitulating, which is what you tend to see in this compression zone. Yeah. So, and also something interesting is that I think I introduced the ribbon. I can't even remember when I introduced it. I think it was somewhere in this zone here. And do you see how beautiful this ribbon predicts everything? As soon as I put this out, everything's changed. Data symmetry gone. Data asymmetry gone. Everyone, it's just a little. It's just constantly compressing, expanding now. So yeah, I don't know. Maybe miners are using it. I don't know. It's completely changed the cycle. It's a much more efficient cycle right now. You used to get these signals that were like, great. And then you publish them, and then of course everybody uses them. Yeah. Anyway, so I don't use the ribbon too much these days because of that. I'm seeing a lot of this sort of stuff moving. Glassnode do a good job of this as well. Difficulty ribbon compression. There you go. They've done it onto an oscillator. I've taken that and made an oscillator, so you can sort of see zones where it's dipping. When it dips, you should buy. That was the buy zone in that peak actually, but of course that peak is going to be looked back at as a buy zone if you're looking at very long term. This indicator is probably good for 3 months onwards out, not really your weekly swing trades, or certainly not anything in the hourly candles. So yeah.
All right, Willie, it's time to wrap this up. So we need to talk about future projections. So what do you see? And there is a big concern. It's like everybody and their mother, including yourself and myself, are seeing the perfect buy zone in the low $40,000 range, something between 39 and 41.5. And everyone is waiting for it. Everyone is looking at it. I know I have my limit orders set in that zone. You have that as a potential floor as well. So the first question is, how likely are we to hit that zone of the very low $40,000 range? And if everyone is waiting for it, what does that mean? Does it mean we're now less likely to hit it? Does it mean we're more likely to overshoot it to the downside and maybe fall down to the $35,000 range? What are your views on the current pullback?
Well, first I'll qualify this. So I'm not an oracle. I'm just bounding sort of demand supply, and I've got models around the extreme range. I see everyone looking in that zone. All the technical indicators point to that zone. On-chain points to that zone. Whenever I see stuff like that, I think that it's going to be front run, because the framing around it is buying pressure as this thing detoxes from speculative FOMO. So the buying pressure is strong. I think we've got 1 to 3 days left in the downward move before this thing completely resets. 1 to 3 days. I think it's going to struggle to get down to the 40,000. Could happen. If everyone's thinking that, I'm thinking, oh, you moved it. Like, can you zoom? I was just going to show something. Yeah, like, do you remember
Oh,
the?
I grabbed your screen share off. I can let you take screen share back.
Okay, like share screen, share. No, don't, just can you zoom out on your chart? I'll talk to it. Oh, gone.
Yeah,
Right.
I'll just use my chart then. Right. So I am also looking for 3 days out because that would coincide with my MRI. We have already dropped a few $1,000s in the last several hours. So we're
Like last
making new
time I
lows
saw,
right now.
everyone really saying CME gap. It's going to fill the CME gap. Back in, I was at 9,600, and I just saw a shite pile of bids in that zone on the order books. Got totally front run, and I'm seeing that right now. The order books it's thick with bids in that 40 to 39 zone. So, for myself, I'm not trading the short time frame stuff. I'm trading on chain demand and supply. So as it's coming down, I'm just, costing in. I'm like adding and adding as it drops. And because I don't know how low it's going to go. I'm not a short time frame. I'm not glued to the screen. I spend most of my day modeling and doing, modeling makes me sound like a model. I spend most of the day doing, quantitative models and stuff like that. So, like, I don't know, I don't know how low it's going to go. So I'm like, I always ask myself, I think it's going to go this direction. And I always ask myself, what if I'm wrong? And so, like, I'm like going, what if it reverses? I think we've got 1 to 3 days of more downside. What if I'm wrong and it breaks out? And if it breaks out, it's going to be a short squeeze. And so I'm just buying in so that when it breaks, I've got my position, at least some of my position on. So I'm buying and I'm continuing to buy as this thing goes. And if it hits that 39,000 zone, I'll probably, I'll spam the green button.
All right, so I'm going to add my commentary here. So right now, for me, the new breakout zone is the top of today's body, but it cannot go back there today. So this is for future days. So we have about 9 hours to go in today's market. I do not really expect us to close above $46,000 today. If anything, I expect us to close below 44,000. But this right here is my upcoming breakout area where this arrow starts to take effect. Now, my perfect buy zone right now is not necessarily price-based. It is more time-based. So my perfect buy zone will be the middle of next week when we are hitting an MRI bottom. Now, ideally, I would be able to pick it up on a giant swing low. But as we said earlier, because everyone is looking for something in the $39,000 to $41,000 range, I would probably be setting my limit orders to buy in the $42,000 range. As Willy said, there might be a potential of people front running the expectation of the very low 40,000s. So to play it safe, getting in at 42,000 may not be a bad idea. But if the price of Bitcoin closes below 40,000 on a daily chart and it goes past my MRI low, I would then be expecting a potential double MRI bottom, taking us all the way down to 35. But I still see this low $40,000 area as a decent buy zone. Okay, so that covers the pullback. Now, what about the upside, Willy? What are you looking at right now? Because for me, because we did not reach my initial buy target of the low $60,000 range, we came up just short. We went up to 58, didn't make it to the mid 60s. That's what I was looking for before a correction and then more upside. I now pretty much up my target because the moment we find this bottom over the next sometime in March or at worst April, but probably early March, I do believe we find a bottom and start to go up. Where do you see a potential top? Right now, I am looking into the mid 70s, if not low 80s, before a more substantial correction to potentially take us below 40.
Okay, so I've got a model around that, and I'm trying to pull it up here. I won't show it. Won't need to, but
So, okay, Willie, I'll give the screen share back to you. So many people are asking us about Ethereum. Guys, I couldn't care less about Ethereum. I don't know how much Willie cares about Ethereum. You can invest in Ethereum all you like, but eventually it will just stop functioning because it's technology that just can't scale. And if you don't understand why Ethereum can't scale, you should have no business holding Ethereum. That's my view. I have never held a single ether, and I never plan to because I understand how Ethereum functions. So I have zero desire to ever hold it. I will just stick to Bitcoin.
Ethereum for me is a tradable asset. I swing trade it. It's really nice to swing trade because it moves. It's got a lot of beta, isn't it? And price Bitcoin moves up. It can move up more in the right setup. And it's highly liquid. So I know a lot of whales and prop funds and hedge funds, they swing in and out of Bitcoin and Ethereum because it can take it. Ethereum can take that capital. It's very liquid. Probably the second most, I think it is by far the second most liquid tradable asset. So you want to slosh value between the two buckets. If you're in a sideways band and maybe alt season is swinging upwards because you can't leverage Bitcoin in a sideways band, then you typically Ethereum tends to explode in that zone. So that's a nice asset you can pour hundreds of millions of dollars into if you're managing the amount of money. So I see it like that. It's really this bucket. It's built enough Lindy effect, liquidity, wallet infrastructure, enough mind share, enough like institutional investors, enough like noobs coming in. Should I buy Ethereum? So like it's an investable asset in that regard. And when I say investable, like within a shortish bullish
It's a trade.
phase in the market.
Willie, sorry, I'll correct you. It's a tradable asset. It's not an investable asset.
It's a swing tradable asset within a phase of a bull market. In terms of, I'm agreeing with you in terms of the technology. I've looked at it, and I have friends that looked into it that are much more technical than me. It's really, I'd be very, very surprised. I think I'd have to pull a rabbit out of the hat. Maybe they can do it. But like, if we're talking about building the platform which we're going to build the world finance on, I don't think so. Yeah, I don't want to go down that rabbit hole. I could talk to it, but if that fails, and I think it will, what we're left with is the new Litecoin, essentially the silver to Bitcoin gold that we'll swing into, and it's certainly liquid. And so I think of it as a secondary monetary asset, and it might continue for a long, long time if it fails as the world compute engine for derivative contracts or creating tokens or whatever you want to talk about. Anyway, back to the topic of price targets on the upside. Oh gosh, I think that the next fib we're gonna clear the 55, 56, 55 $1 trillion dollar cap resistance. Next fib target is 63,000, 73 thereafter. I think we can get through that. I've got a model around
Well, we're not on any screen share right now. If you did want to show something, go.
No, just talking to it. Yeah, I think that we've got potential to hit that 73, 75 zone. I think that we're really due for a top, a proper top. but not sure. I really don't know. We might just continue doing these waves. That this is the second wave we've had. The first one was fundamental. The second one we're seeing as speculative. Maybe we just keep doing these sort of waves all the way up. Right now, my target, well, my upper bound is 70. Let's say $71,000 is what we can hit, and that's climbing all the time. It's very similar to the it's just another model that I've got. It's based on the same inputs as the floor model, looking at capital flows moving into the network between investors, but that's climbing. So yeah, it's really I don't know yet. Like the way I look at this market with the models that I have, we hit our first top in $42,000. And we pulled back. That was the first top of this 21, the 21 bull market. So right now we're just moving up to our next top, and I don't know what that's going to be. But yeah, let's say 75,000 right now. Maybe it'll go higher.
Okay, so here's the big question. You and I are both pretty bullish on this cycle. I mean, I have a more realistic upper target than many people. My upper target on this bullish swing is about 150,000. Most people have it upwards of 250 to 300. And by bullish cycle, I mean the ultimate top before the next halving.
Oh, okay. I'm talking about the next few months.
Right.
Okay.
No. We're getting there. So I am also assuming your target is upwards of 200,000 on the current 4-year halving cycle. I think that's safe to assume that because I've read your newsletter. But the question is, after your current shorter term target of in the 70s, how likely do you think we are to then swing lower than the current low we would achieve before? So for example, say we turn around right now from $42,000 and we go to the mid 70s. Do you foresee a drop below 40,000 before the push next year to 150 to 300,000?
Yeah, it's not going below 40,000. I'd say that with 99% certainty. It's okay. It's going to be high. I think that we're bounded in this bull cycle. If it's not all-time high, if we haven't hit the all-time high for the macro cycle top, we're in a range of 33% pullback on daily closes. So if we hit 75,000, then 50,000 is the bottom, according to that.
Got it. So you would be looking for a higher low once we hit that 70s range. You don't put much % chance on a sub 40 before the ultimate breakout this cycle.
Yeah, and that's not just guessing. That's with these models I've got, and it's like we had last time, I think it was 44%. I put in the newsletter 44% pullback in the bull market of 2017 on daily closes using this model. It was 66% in the 2013 cycle. So far, we're looking like 33% is this for 2017. And if you run a trend line across all of those, it's showing 33%. So if we hit 75,000, probably 50,000 is going to be the floor. If we hit 100,000, maybe 66%. 66,000 is the floor at that point. So something like that.
All right. I think that's a good way to end it. I'm just going to pull up screen share one more time. As you guys can see, I will be very, very curious what Bitcoin does 3 days from now, because we will be hitting the MRI bottom for a potential buying opportunity unless we reverse right away right now. That's pretty much my outlook. The weekly is about to end. That is a disastrous week, but we're still in a nice bullish uptrend on a weekly scale. Short term, that is a nice rebound candle. I do not put that much emphasis on this candle, considering how much we dropped in the last 3 hours. I am still looking for slightly lower prices over the next 3 days, and then we will see from there. All right, guys. Once again, I've been joined by the one and only Willy Woo. You can follow him on Twitter as Woonamic. Dude, you broke 300,000 followers. That's amazing.
Oh, thank you.
That's
I have no idea why, because I wasn't even tweeting. Oh, no, I know why, because retail has arrived, actually. Retail has arrived.
That's really, really good. I mean, like, I can't pick up a sub on neither Twitter nor YouTube to save my life, but that's all good. Check out Willy's website, charts.woobull.com. It's woobull.com, but the important part is, of course, the charts at woobull.com. And also check out his newsletter. The link is in the video description, willywoo.substack.com. This is more general overviews. You put these out approximately every 2 weeks, and they're not that easy, right? You put a lot of work into this. Probably takes you about, what, 2 days to write one of these things?
Yeah, between 6 and 14 hours to do this. A lot of it is data visualization. Sometimes it ends up in code to clean up the charts. But yeah, and then of course, all the stuff I do in the week just to work on new models.
All right, and I am, of course, Tone Vays. You can check out my website, tonevays.com, and I have some on-demand videos for trading education. Prices finally went up. I lowered prices for Black Friday in November, and finally, 3 months later, finally raised it. Those interested in trading the MRI indicator can find it, of course, right here. There's also a free tutorial for Learn Trading with a bunch of links. And I do have to mention the financial summit. We are looking to move this from Bali to Zanzibar because freedom reigns in Zanzibar and Tanzania, but not Indonesia. And it's going to be great. Hopefully, Hong Kong will end its quarantine on the way back. And Willy Woo would, of course, be able to join us along with other notable names. It's going to be an amazing event. So keep an eye on the Financial Summit website, thefinancialsummit.com, where we will give you more information. Also, unconfiscatable. I have too many conferences. Unconfiscatable. We're still trying to get it into Miami, and I will have a big update on this next week, whether it will or won't happen. I doubt Willy Woo would be joining us for this one. It's a little too soon, and the world is still in quarantine. But all the US guys should be there, like Jimmy Song and Max Kaiser. All right. On this note, I'm going to go ahead and end it. Thank you very much for watching, guys. Please don't get scammed by fake Tone Vases. I got to do these public service announcements, or by fake Willy Woos. I'm sure they are everywhere. If I do not give away my phone number, I've already been SIM swapped. So I go out of my way not to give a phone number, and I tell people that use WhatsApp to use Telegram and hit me up by a username. I do not reach out to strangers and offer them any kind of investment services. So please do not get scammed. I know someone that got scammed for 50 grand and at least a dozen people for between $1,000 and $3,000 by fake Tone Vases, and there's nothing I can do about this. I'm sorry, guys. Please be smart. All right. Thank you all so much for watching, and see you all on the next one. Closing thoughts, Willy. Anything else?
Yeah, if you see a fake Willy Woo on Twitter, please report them, or them, or whatever that bot is. It's just getting a bit right. So we've got to do our role here and report all the stuff. It's scam season. So yep. Stay safe, everybody. Buy the dip. Yeah, don't freak out.